Welcome to ForexTV.com. It's Tuesday, December 4th. I'm Remy Huki for your New York Forex Market Buzz. In New York afternoon trade as of 1:50 p.m. Eastern Time, Euro-dollar is trading at the 147.60 level. Dollar-yen is at 109.91, while dollar-CAD is at 1.0125. Earlier today, the Bank of Canada cut the interest rates by 25 basis points to 4.25%, and many had expected a rate cut in early 2008. While economic growth has come in as forecast overall, lower inflation has reflected competitive pressures. Joining me this afternoon is George Davis, Chief Technical Analyst at RBC Capital Markets. Good afternoon, George.
Good afternoon, Remy.
Thanks for joining us today.
My pleasure.
Well, first and foremost, let's start out with the BOC decision. The central bank cited vulnerable spots in the economy, as well as reduced inflation expectations as reasons for the cut. So let's start out with price action for dollar CAD and CAD yen. Earlier today, we saw CAD sell off against both the greenback and the yen, falling against the yen to 109, 2025 to the 108 level. So, George, going forward, what is your forecast for the CAD and for the BOC?
Well, I think what we're likely to see is a continuation of the themes that we've seen over the last couple of weeks in the Canadian financial markets, in the sense that we are looking for some additional rate cuts from the Bank of Canada as we move into 2008. So I think there is the risk that in January and March of next year we could potentially get some additional rate cuts as the bank tries to prevent a significant domestic economic slowdown, as well as try and help prevent an economic slowdown on a more global basis. And as a result of that lower interest rate scenario and forecast, I think what we're likely to see, at least over the next couple of months, is some additional weakening in the Canadian dollar, very similar to what we've seen over the last couple of weeks as the market started to price in a lower interest rate scenario in Canada.
Well, now let's move on to price action for euro-dollar. We're seeing a weaker dollar on the session, and as the euro gains, we're seeing the euro hit a weekly high against sterling, rising to currently 71.76. Looking ahead from a technical perspective, what are your levels for euro-dollar as well as euro-sterling?
Okay, so looking ahead at some of the important levels for some of the currencies here, starting off with euro-dollar, basically we have some support that comes in at 145.33 right now, resistance coming in at 148.69. In terms of trading today, we have seen the euro gain. Again, I think there's a lot of concern over market uncertainty right now. Some of the financial stocks in the U.S. being downgraded by various research outfits, and that additional uncertainty, I think, is weighing on the U.S. dollar across the board. And when we look at the euro versus the pound sterling, as you mentioned, we have seen the euro register some fairly decent gains over the last basically over the last few weeks, and we're currently testing a very important resistance level here at 72.25. That's basically a double top going back to 1998, and if we're able to take that level out, then we should see a move up towards the 73-cent level. And now to the downside, we've got very good support that comes in at 68.88 for euro sterling.
And George, moving on to the yen, specifically dollar yen and euro yen, we saw the Japanese currency gain today against the greenback euro and sterling. But going into the coming session, what are your levels of support and resistance for euro yen as well as dollar yen?
In terms of dollar yen, basically we have support levels that come in at 107.25 on the downside, with resistance coming in at 111.63. Continue to think that in the current environment we are likely to see the yen register some additional gains, so I think that the bias is for a move down towards that 107.25 level. And taking a look at euro yen right now, it continues to trend to the top side, although in the last couple of weeks we have seen the market basically run out of some upward price momentum. And I think right now what we're likely to see is resistance that basically comes in right around the 163.50, 164.25 area, attracts selling pressure in the cross. And we've got some initial support that comes in on the downside right around the 159.70 level. So I think it's prudent to keep an eye on the 159.70 level in the current environment as risk aversion remains fairly prevalent.
And last but not least, let's round out the discussion with your focus on the week ahead. We do have the BOE and ECB rate decisions coming out Thursday, as well as the NFP on Friday. So with a potential market-moving event risk on the fundamental front, what's your advice for Forex traders out there?
Yeah, I think in terms of the focus going forward, as you mentioned, the central bank announcements coming up on Thursday are going to be extremely relevant. I think for the most part, people are still thinking that the ECB is going to keep rates on hold at 4% right now. But I think what we've seen today in terms of the Bank of Canada rate cut is some people are now starting to think that we might see the potential for the Bank of England to actually lower rates on Thursday. So I think there's an increased probability of that as we move ahead towards Thursday. So I think that's something that investors and traders should keep an eye on. Obviously, if we do get a rate cut in the UK, that's likely to exert negative pressure on the pound sterling, fairly similar to what we've seen so far today, with the market starting to digest that type of scenario. So I think that's a factor to keep an eye on. And certainly on Friday, we've got the payroll numbers coming out in the U.S. The market basically looking for 70,000 new jobs and an uptick in the unemployment rate from 4.7 to 4.8%. I think right now, just given the bearish stance of the market, if we do see a print for payrolls come in below 50,000, I think we're likely to see the dollar come under another bout of selling pressure. Again, I think there's a lot of uncertainty that's out there surrounding the whole subprime market sector, and that's having knock-on impacts now, I think, on the consumer as well as corporations and businesses in terms of their hiring and expansion plans. So if we do see a weaker than expected outcome for the employment report, I think we're going to see the dollar stay under pressure as we move into next week.
Okay, George, as always, thank you very much for your insight and analysis.
You're very welcome.
Have a great afternoon.
You too.
That wraps it up for your Forex Market Buzz with George Davis, Chief Technical Analyst at RBC Capital Markets. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.